Thank you for tuning in. I am your host, Joseph Martin. Hit that like and subscribe button to support the channel and hit that bell icon to receive notifications. If you've made any attempt to be responsible with your money, I'm sure you know that you need to save and invest. But knowing that you should do something doesn't mean that you actually know how to do it. In this video, I'm going to give you 7 simple steps that most people overlook or don't even know they should do before they start investing in the stock market. I've learned these steps the hard way, so you don't have to. Spending over $10,000 on online trading courses and reading countless books, and rarely did any of them talk about what you should do before you start investing. Before we get started, this isn't financial advice. Read the disclaimer in the description. So let's dive into it. Step number 1, have a consistent stream of income. If you hate your day job, I have good news for you. You're going to learn to appreciate it once you learn how to use the money you earn from it to fund your financial freedom. What if you were using your money from your day job to save and earn enough money from another resource so you could quit? Most people who hate their jobs don't just hate it because they don't enjoy what they do, but they don't think there'll ever come a day that they can quit. So your consistent stream of income is what you're going to use to cover all of your finances. One of the major mistakes people make when they first start investing or trading is using the money that they don't have, or using money that they don't have. What I mean by that is that they're using rent money, car note money, bill money, and try to make a quick buck trading or investing in the stock market. Trading and investing involves risk, which means there's a possibility that you can lose money. And you don't want to lose money you were supposed to use for something else, like your car and your rent. Number 2, learn how to save money. This should be a rule that every investor and trader should follow. If you don't have money just saved sitting in cash with no other purpose than to be available if you need it, you shouldn't be trading or investing. This isn't something I've read or heard somewhere. I'm speaking from experience. I've tied up all my cash buying shares in the stock market with very little and sometimes no savings at all. What you'll learn in the market is that timing is important. When your bills are due or a financial emergency comes up, the market doesn't care. To free up cash, you might have to sell at a bad time in the market and take a loss, only to see a few weeks or even days later, if you had waited, you would have made money on those shares you sold. You want to take money out of your investments and trades because of a stock market reason, not a personal finance reason. Sometimes you can lose money in the market, not because the opportunity was bad, but your timing on it was bad. In other words, buying or selling shares at the wrong time. So having cash on hand for some unexpected financial situation gives your investments or trades time to play out. Also, I don't like the common emergency fund title for savings. I chose to name my savings Freedom Fund. Take the time to name your savings what it means to you. You can always use the money for whatever reason you feel is necessary, but only you can explain the why you have it. Number 3, learn the language of money. Finance is a profession, and so is law and medicine. Professions have their own language, special terms and words that they use. And if you don't know what they mean, you're going to be lost. A huge part of knowing how to manage your own money is just to understand the language being used. I get that this can be intimidating for someone who feels like it's going to take a lot of time and be extremely difficult. So here's the good news. You don't need to learn everything all at once. You can just learn as you go. The only way to do this is to be honest with yourself, stay curious, and remain determined to take control of your financial situation. If you come across a term or word and you don't know what it means, look it up. And don't just use one resource. You can use an online dictionary and AI. When you use AI, tell it how you came across the term or the word to increase the chances of it giving you the right meaning of it. Was it at a bank, in the stock market, a book, and include the name of the book, for example. Another way to expand your vocabulary when it comes to money is to read books on investing, trading, and finance and follow the same principle. If you don't know what a term or word means, look it up. Number 4, choose the right broker for you. Now that you've done your homework by doing some reading and online research, you should have came across the terms brokerage account or broker. You're going to need a brokerage account to have the ability to participate in the stock market. All brokers are not created equal. At the time of this video, brokerages like Robinhood and Webull do not offer benefits like debit cards, check writing, bill pay, and direct deposits to their accounts. I'm specifically referring to accounts you would use to trade or invest. There are a number of brokerages to choose from, but I would recommend learning about what they have to offer you as a customer, what your personal needs are, as well as what a brokerage firm does. Here's a quick hack to help you narrow down your choices. If they offer you free stocks to get you to sign up or to refer someone, it's probably not the best choice for a broker. The value a broker offers to their customers, which would be you, speaks for itself. They would never give you shares to get you to open an account or refer them to someone else because they know you'll be so happy with their business. You'll refer them even if they don't offer you free shares. I fell for this trap with a few brokers, as well as running into another issue when I wanted to transfer my shares. As a bonus, I'm going to share with you the hidden cost of a low quality broker. If you make the mistake of choosing one and you attempt to switch brokers, it's going to be expensive and a long process. But this is only the case if you are attempting to transfer shares you already have in your account. They know that sometimes people don't want to sell because it causes a taxable event and you could miss potential gains. If you sold shares and were going to use the money to buy them again in your new account, it's possible that they will be at a higher price than they were when you sold them. Low quality brokers know this and they use it as a strategy to keep your business once you learn about the limits of what they have to offer compared with other brokers. Number 5, understand the difference between trading and investing. This is extremely important, especially for beginners. This is the basics, and you'll be surprised that some people who should know don't know. To keep it simple, trading is when you hold shares in your brokerage account for less than a year. Investing is when you hold those shares for more than a year. Trading would be considered short-term and investing would be considered long-term. So make sure you talk to a licensed tax professional because this makes a difference in how you're taxed. Number 6, all beginners should learn how to invest before they start trading. The major benefit of investing instead of trading first is to get the get rich quick idea out of your head. Starting off knowing you're going to hold shares for more than a year makes you more careful about that decision because it's a commitment. Trading is a sped up version of investing, and it offers an opportunity to make money if a stock loses value. So just focusing on the buy low, sell high strategy on investments gives you time to learn how the market works. As a beginner, your number one lesson will be to learn and get educated, but you'll learn over time that your best education is going to be from what you learn from experience. Number 7, learn how to invest using your broker's trading platform or website on a computer, not on your phone. Your phone should never be the main way you monitor, learn, trade, or invest. Here's why. It's limited. The mobile version of everything is usually dumbed down or reduced to the basic functions. You shouldn't want the basic way to manage and make money. You should want the best way for you to manage and make money. Remember, I said main way. So it's okay to use your phone or app when you're away from your laptop or computer. And it's an excellent tool to receive updates and notifications from your broker about accounts, trades, investments, or stocks you want to keep an eye on. And here's another way to recognize a quality broker. They usually offer 24/7 customer service where you can talk to a live person on the phone. They offer free scheduled walkthroughs with someone where you can ask them questions about their platform. And they have educational resources like courses on their main website, platform, or both. So this step should help you get an excellent start with your new broker and familiar with how to get the most out of them and what they have to offer. You already know. I hope that you learned something, and I hope that you earned something. Hit that like button and put your thoughts down in the comments. Let me know what you guys think. Make sure you check out the other two channels, Original Greatness Uncut and Original Greatness Shorts. And if you want to understand the danger of schools teaching everyone to be employees, check out this next video. Take care and God bless.